Hello, YouTube. The stage is set for a pass or fail as we are now testing the uptrend, which was formed since our October low and is held. So the reason why this is really important and the stage is set for a pass or fail is because if the third time is the charm, this is almost the area we need to hold. There's one final line in the sand at 390, but otherwise, we need to start advancing because the pattern that is held ever since the low is a very simple one: pop, flag, with volume. So pop, flag, pop, flag, pop, flag, pop. And every time we had green volume. So if the third time is the charm, this is the exact area we need to bounce because we've now lost the 200 DMA when only on Friday it was acting as like really strong support. So as we're starting to show off, I'm going to ask you for a big favor, please, and thank you. If you could, please smash that thumbs up. I would really appreciate it. And you're probably wondering, Justin, on the weekend you said this is going to be a bear trap. So WTF, Justin, we're down by nearly 2%. Were you wrong? Does it matter? And that's what we're going to try to address today. So yes, I was calling for a bear trap, which was a scenario. It wasn't my guarantee. It's not the Justin guarantee. But if this is a bear trap, we're going to find out tomorrow. Why? Spending 1 day below an average is not a trend. 2 is where we can signify that trend. And if we just go flat, what's going to happen here is the S&P is now going to start breaking down when we already have QQQ forming that massive head and shoulders here. And it's losing its uptrend. It's losing its gap zone going back to June. So like QQQ is like flashing a big warning here, which might actually drag the S&P down. And the reason why this is important is because if the third time's not the charm, well, this is the area where the bears are going to want to stomp it down. And there's some fuel for today. Fed could pencil in higher interest rates next year while slowing hikes in December. This is exactly what Jerome said. And what's really interesting is Nick from the Wall Street Journal has been the one out there pretty much telling us what Jerome wants if his message was not heard and the market did not act the way he wanted it to. And then today at 10 a.m., we also had ISM non-manufacturing coming in with an expansion or 56. And remembering that red is good, green is bad. Good data is bad, and bad data is good. So when we have stronger manufacturing, what that means is that we need to be more mindful. The Fed could what? Could hike, right? Could pencil in higher interest rates for next year. We talked about that on the weekend with the Fed funds rate. So I encourage you to watch that if you want. If not, we got our catalyst for today. It's a really like short week for data. We got payrolls coming out on Thursday, and PPI on Friday. So whatever the trend's going to be for the rest of the week, I think it's already getting established. If we now zoom out for a moment and try to look here at our monthly chart, which is what I was using for our weekend review. Again, let's think about when is the FOMC meeting? Let me actually pull up the calendar here because I think it's really important for us to look at it. Oops, 1 second here. Let me just pull it up. All right, open image, new tab. There we go. So when is it? 14/15 is when the Fed and the ECB decide. So that's like halfway through the month. And for where we are right now, we now have a higher high and a higher low, but we're below the previous high. This is called a failed breakout. It broke out, but failed to hold it. So what I mentioned on the weekend was I'm looking for potentially as low as 390. And where is that? Well, it's roughly 10 points lower for us to go back up to our high of the month at 410.00. It's nearly 10 points too. I see roughly equal risk reward for us to be going higher or lower from right here. However, what I will also note is that if we make a move down and then snap back off 390, that's where I think the bear trap's going to be if it's not here. But if we lose 390, well, then we're probably going back down to test at least 370, if not our 50 monthly. So that's what we want to pay attention to today. If we don't hold the 400 area and we don't get back above the 200 DMA, like in a hurry, I think there is a chance we could push down to 390. And that is where we're going to find out whether or not the third time truly is the charm. If we get a weekly close below 390, well, we're not repeating the pattern from the last couple of bounces on the 50 monthly here. And yes, I understand that I'm not looking for a mega expansion. I'm looking for what happens after we bounce off the 50 monthly. Well, 1, 2, 3, and then we expand more. Let's have a look here and see what happened on that third candle, which is where we are right now. Bounced perfectly off the previous high, pretty much, yes. Now let's go back to the last test. We got 1, 2, 3. Okay, where did the third month back test to? Well, pretty much the high from the previous candle. Bounced, flagged out, and then advanced again. That's what the bear trap would be. We're only going to know it's a bear trap in hindsight when we're higher. So that's scenario. That's the scenario for the bulls. The scenario for the bears is that, hey, we got a failed weekly breakout. We're now looking to slam the hell out of this thing. And if we now look here at the weekly chart, we got close enough to the 50 weekly. We don't technically have to hit it, although we are likely going to defer that until later. So as we look here to the S&P in a very clear manner, I think we have to just be very mindful that where does 403 also land? Well, it's about right. It's almost halfway between 7 points higher or roughly 13 points lower. It's not in the middle. 400 is in the middle where we are right now. So in this current pattern, every time if we let's just go back here, let's delete everything, let's throw the uptrend back on, and then we're going to look at a few more things which are currently also sending us a signal. So as we look here, okay, I want to look and see what I actually want to do here is to snap a line and then look at the reaction here to the 200 DMA. On Friday, it was 4037. Today, it's 403.56. So let's snap it here at roughly 4036, which is the average for the last 2 days. And I just want you to see that there is a push-pull happening here. So the push for the bulls happened on Friday. We gap down, pump up. We penetrate the 200 DMA, come back down, build support. And once we close our first candle above, that's when we just start expanding more. Well, almost the exact opposite happened today, where we open up below, gap down, pump up. We open up a new 15-minute candle. And what happens? Well, it just starts puking. Let me just delete that line and restamp this here. There we go. So we open up the second candle. We push down, come back up. And then we get a kiss of death here. At what time? That's at 11 o'clock. Yes. However, at 10 o'clock on this candle right here is when we got the data. So the good data was bad, and that was the fuel for us to go down after the Nikki leaks. So it's not really all that difficult. On Friday, we push over the 200 DMA. Today, we push below it. And now the question is, which team wants it more? Because the stage is set. So with that in mind, let's just look at a few more charts here to try to understand why. Same thing for QQQ. We have a head and shoulders pattern. That's bearish. We're right on our uptrend. That's support. But if we don't hold it, now it becomes resistance. There's also not really any major red volume here. So I'm getting conflicting messages between both. And when I now look across the risk spectrum, this morning we were green in crypto. We were green for the S&P, for the NASDAQ, and then we weren't. When I look over here, I'm like, whoa, well, what's notably green and what's notably red? Well, Tesla can't stop the fade, baby. Whoop, right? It's like getting a fresh haircut every day. So if this inverse head and shoulders here does not hold, that could be enough to drag us lower. Volume's not like super elevated yet, but I'm noticing this. Also looking at Amazon, another laggard, heavy weighting in the QQQ. Well, just cracked the new lows here. Yikes, that's not good. As we look here across for the final risk assets I want to look at, I'm now looking at Bitcoin, and we still have a higher high and a higher low. I think yesterday, 1682, 16865. No. So we actually got a bearish engulfing daily candle today. So if that's going to be the start of more downside, well, we need to see follow through almost immediately. So watching for that one closely. And then as we look here to looking at FXI, actually, why? Well, the US is the one who's having the issues. It's not the world. China basically gapped up again, exhausting, right? 1, 2, 3, 4, 5, 6 massive holes on the chart. This one wants to go up, which just means that people are rotating. We're noticing financials got a pretty big hit. We're noticing that almost everything actually got a pretty big hit. Russell got a pretty big hit. And a lot of these are having a hard time here at their 50 weekly moving average, which we talked about on the weekend as well. So I'm not sure which team's going to win, but I believe the stage is now set. And as I look here to what were the culprits today? It was the dollar. So the dollar is now where? It's right around that 200 DMA, which we also talked about on the weekend. So if it's able to reclaim it, that means S&P is probably going to remain below its 200 DMA. It's also got a nice little boost, a little shot in the arm, back above 20, poking as high as 21.2 today. And US 2-year and US 10-year are both up. So if this trend continues into tomorrow, I see it likely continuing until the end of the week. But we still do not know who the winner is until we get a decisive break, either above or below either 390 for the Bears, meaning a weekly close below 390. I think that would kickstart some more downside momentum, or a close over 410. And noticing that Our 50 weekly is now exactly 411. So if we can't get above 410, well, it means we're still below our short-term price here on the weekly chart. So with that said, I thank you so much for watching. And if you're interested in the weekend deep dive, we're going to leave that in the top pinned comment and also in the description. If not, I wish you all the best of luck into tomorrow. Please manage the risk, and I'll see you tomorrow at the close. Thanks so much.